Hey insiders, this is my next exclusive video teaching you guys trading strategies. Originally I wanted to break this video up into two, but I've decided to combine everything in one video. So definitely take a look. Some of this might be things that you already know, and some of the things you probably don't. So let's take a look and get started. So in this video, you will definitely you will get some of the fundamentals and some of the more advanced tactics. So there's a few sections. One is versus Bitcoin slash Ethereum, how to take profit and how to cost average, BTC ETH versus fiat and where to hold them, holding versus swing trade versus day trade, stop losses and know when to cut your losses, and knowing when to sell to buy another coin. Okay. So very first thing is verse BTC slash ETH, because this still confuses people, and honestly there's really two ways to track your performance. Okay, as you guys know, I compare everything relative to the US dollar. Okay, for me that is easier and it makes more sense. But I know that a lot of people don't like to do that. They like to track the performance versus Bitcoin or Ethereum, which is still fine, but I think it's harder to do. But I get the logic behind that, okay? So the logic, I'll just go over. The logic behind tracking something versus Bitcoin slash Ethereum is that you want to make sure that whatever trade you get into is growing faster than Bitcoin or Ethereum. Otherwise, really, you could look at that you're actually losing out. Okay, so for example, Bitcoin is still the coin I believe in terms of building true wealth. So you want to accumulate as much Bitcoin as possible going forward. Okay, that's long term. Short term, you know, that's obviously that's not the case. But long term, definitely, I believe that you want to build and accumulate as much Bitcoin as possible. So you could do that several ways, right? Obviously, you can just buy Bitcoin. You could buy it and hoard it, right? So whatever money that you have locked away, or you have a little bit that you save away every month, you buy Bitcoin with it. That's great. So then, you know, maybe you can accumulate 1 or 2 or 5 Bitcoin in a year, and you just add on over and over throughout the year, right? You could do it that way. The other way is obviously what I think most of you guys join Insider for, is to learn how to trade altcoins, and by utilizing that, you can obviously take the money that you would have spent on Bitcoin. You can buy altcoins with it, trade it, make a lot more, and then that way you can then accumulate more Bitcoin at the end of the year or throughout the year, right? So I think that's why most of you guys join Insider. But if you buy altcoins, and we're not even saying it goes down, okay? Let's say you buy altcoins that is moving slower than Bitcoin, okay? In terms of how fast it goes up, and this was the case last year. There was several months last year, okay, specifically before December. I believe it was around August, September, October, November. Bitcoin went up crazily, and even the first half of December went up crazily, right? And those times it was very hard to outperform Bitcoin because it was going up, doubling, tripling, quadrupling based every few weeks. So in those cases, if you actually invested in altcoins and it went up slower than Bitcoin, then you're losing out on your goal, right? Because you're trying to make more than Bitcoin, and if Bitcoin is rising faster than your altcoins, then you're really losing out. So that is the reason why some people want to track their performance versus Bitcoin and now maybe Ethereum, okay? Because if you're buying something that's simply moving slower than Bitcoin and Ethereum, then ultimately you would have been better just buying off Bitcoin and Ethereum itself, and there was no point of trading, right? So I get that. I get why some people like to track performance based on Bitcoin and Ethereum. Now, I track it to USD for a couple different reasons. One is I think it's easier to track, right? So for example, if you're buying something versus Bitcoin slash Ethereum, you have to keep track of what you bought it for, okay? And And you have to look at, because Bitcoin and Ethereum moves up and down, you have to gauge in a way where you have to, I guess, understand how much you're up or down. So I guess if you do everything with Ethereum or Bitcoin, so for example, if you buy, several coins and it comes out to be 0.1 Bitcoin, and later on you sell it and you get zero point 0.2 Bitcoins, then yeah, then you are in the green, so, sort of, okay? That only works out if Bitcoin did not fall. Okay, so if Bitcoin fell tremendously, that can still happen, and that could still mean that you're actually taking a loss, even though you've gained against Bitcoin, right? So that's the reason why I don't like it that way. Now, for Bitcoin and Ethereum, that's harder, but that can still be the case, because if you think about it, let's say you buy something and at that time is 0.1 Bitcoin. Okay, and let's say at that time Bitcoin was at $20,000. All right, now Bitcoin has fallen to $10,000. That 0.1 Bitcoin, right? If you're just tracking performance based on the 0.1, you can't really tell, okay, because you're tracking against Bitcoin. So that whatever that you bought at 0.1 Bitcoin can now be worth 0.2 Bitcoin, simply because it held better than Bitcoin, even though the underlying value of Bitcoin has dropped tremendously. So that can happen. But I guess if your ultimate goal is to increase, make sure that you outperform Bitcoin, then that tracking it that way is fine. Same thing with ETH. But I don't like to do it that way. I like to see how much I'm making. Okay, so that's why whenever everything that you have seen and everything I have been talking about is always in USD, because you know what? I like to see if I'm buying a certain amount of coins for $10,000, okay, which equates to, let's say, one BTC. So I buy a whole bunch of coins for one BTC. I write it down at that time, and Binance and Bittrex, all the exchanges tell you what it converts to, right? So it's not like you have to manually really convert anything. You can put it into an insider portfolio. You can manually write it down. You can use Blockfolio, whatever you want to do, right? So if you track it that way, so let's say several coins for one BTC, which is $10,000, and then if you sell it and it comes out to be 0.2 BTC, but the 0.2 only comes out to be $15,000, then you know that you made $5,000. So that way it's easier for me to understand that this trade, okay, regardless of Bitcoin going up and down and keeping relative, tracking relative to Bitcoin, all I care about is, did I make money? And in this case, yes, I made $5,000. Okay. Now, in this kind of tracking, of course, if Bitcoin went up faster than your altcoins, then technically your performance against Bitcoin is not good and you lost. But you know what? In my case, I'm more worried about if I made money, right? So if I made less money than Bitcoin, that's fine, okay? Because not every trade is going to be like that. Ultimately, what I'm worried about is, did I make money? And if so, how much? That's why I do everything relative to USD, okay? Hopefully you guys understood what I've been explaining, so you can keep track of things versus Bitcoin, Ethereum, okay? Or versus USD. I like USD. I recommend it. I think it's easier to comprehend, especially for newcomers in the space and more of the beginner traders. It's very easy to just simply write down how much you paid in total for your trade, how much you bought it for, and then how much in total you sold it for, and you subtract the two, and and the insider portfolio tracker definitely helps you do that, right? But you could also do it versus BTC, which will kind of gauge how much more you made versus Bitcoin or Ethereum. But ultimately, it doesn't really tell you how much you made per that trade. So that's the difference between the two. If you guys don't understand, rewatch this video. Hopefully I've explained it well enough. If you still don't understand, then reach out to me on Slack or write me an email and let me know. Okay? next section, how to take profit and cost average. Okay, this is a fundamental thing. All traders should know this. Although there is no schedule, no set way or set schedule, so you guys have to figure out how to do it yourself. First of all, you want to trade, you want to become like a machine and take emotions out. This is almost impossible. Even seasoned traders that have been trading for decades still have a hard time doing this. So if you master this, then you're probably better than 95% of the traders out there. I'm serious about that. If you master this, which is very, very, very hard to do. But become a machine and take emotions out. What does that mean? Okay, that means everything you do is like a machine, right? It doesn't matter. Like all the FOMO is out, all the external factors is taken out. It's like you don't hear or see anything other than the numbers, so that whenever you see something go up by a certain amount, you take out, and goes up a certain amount, you take out, and then if it decreases, you buy, and decreases, you buy. So that means you're ignoring everything, right? Like the whole world, like Armageddon could be happening, right? And everyone is panic selling and taking everything out, and you just tune that out. You're like, no, I don't care. I'm still gonna follow my schedule. And it's been proven time and time again, if you do that, okay, you will make a lot more money. Although almost no one can do that completely, okay? I'm just telling you up front, almost no one is like that. And even the best traders have emotions or FOMO kick in at times, okay? Obviously, they've gotten much better at it, probably much better than a lot of you guys or even myself, but that doesn't mean they ruled it out or completely removed it, okay? First thing, now this is easy. Take out initial investment as fast as possible, okay? So that means you don't lose out on that money, okay? That should be the very first fundamental thing that you guys all concentrate on, and this is easy. Whenever you invest into any coin, as soon as it doubles, which means that if you put in $1,000 and now it's worth $2,000, take out your initial investment, okay? That's easy. You take it out and you ride the rest. It's called playing with house money, okay? So in this case, you took out your initial investment, so even if that coin goes belly up, like BitConnect or whatever, right, or Tether, Tether is a bad example, but if you do that, even if the coin goes belly up, you haven't lost. You still have your original investment, right? Now, a lot of people don't do this because they want to be greedy. They want to keep riding the whole thing, and that's how you can't get burned. So taking out the initial investment as fast as possible. Usually the first time you can do that, or the recommended way to do that is when the coin doubles, take out the initial investment, right? You don't have to wait until it doubles. You can wait until it just, even if it goes up 50%, you could take out your initial investment, but then you really have a small amount that you're riding, but still that's okay. So again, that's up to you, but the very, very fundamental thing is you want to figure out how to take out initial investment as fast as possible, okay? Second thing is, I mentioned this, set a schedule. Be a machine and set a schedule. So for example, these are just examples. You can choose to follow it or you make up your own schedule. Every time a coin goes up 50%, you take out 25% back. Okay, so you put in something that originally was $1, now it's worth $1.50. Okay, you take out 25% of that. And then you keep following that. Every time it goes up 50%, you take out 25%. So you never truly take out 100%. You're always letting some ride, right? Because by taking out 25%, it's not like you take out 4 times and you're at 100%. No, that's not what it means. It means that you're taking out 25% of whatever's left over at that time. So you're always leaving some riding, right? And you do this enough eventually that you have taken out your initial investment. Obviously you have taken a lot of profit out, so whatever you're riding, if it starts dropping, right, it doesn't really affect you because you already made more than enough on that coin. So that's how you set a schedule when things are going up. Again, this is just a recommendation about 50%. You can do it at 40%, 25%, at 100%, but set a schedule for yourself and follow it as much as possible, right? Just like a machine. It hits it, do it, hits it, do it. You can even, you can even set buys right away with any of these exchanges, so that once you set it, then you forget about it and it does it automatically. You can even try that. And same thing, this is harder, but this is when you're cost averaging, right? So for example, every time a coin decreases 25% from your original amount, then you can choose to buy 10% more. Okay. Again, this, I put an asterisk by it because this only works if you have money on hand, right? So if you have money on hand or you're putting in more money, then you could definitely follow this strategy. Every 25%. So for example, we're at the time of this video, we're coming off a huge correction where coins are now down 60-70%. Okay, so in this case, if you follow the 25% rule, you would have bought or cost average about 2 or 3 times already. And the reason why you want to cost average is, and you only want to do this on good coins, so if you're following my recommendations, then you most likely are holding good coins. But you want to do this because when there's a time of correction, almost everything goes down. But you know the coin is long, good term hold, right? So you want to take advantage of that decrease so that when you buy, you cost average, that means when something goes down 25%, you buy 10% more. So that when it comes back up to the original level, you're actually in the green because you already bought some at a lower price. And so if it goes down 25%, you buy 10% more. You go down another 25%, you buy 10% more. So every time it goes down, that 10% you're buying more, it becomes more and more valuable because it's so low, and it's bringing your overall cost down. So that's why it's called cost averaging, right? Obviously, again, with the asterisks, you have to have fiat currency on hand, or you have to sell something else to do this, which I will mention later on. That's going to be a much harder decision to make, and most likely you don't want to make that decision. So the best course of action is to have fiat on hand. Okay, so moving on, BTC/ETH versus fiat and where to hold them. Okay, so there's 2 types of exchanges. You guys all know this, right? You either have the fiat exchanges, which are like Coinbase, Gemini, Kraken, and there's probably a few others that people use. And then you got the BTC exchanges, which is like Binance, Bittrex, KuCoin, and so forth. Okay. My recommendation is you always want to have some fiat ready on those exchanges. This is hard, okay? And the reason for that is because when you're trying to deposit a lot of money in those fiat currencies, it's hard or harder because they give you a really strict limit. Like Coinbase and Gemini, they limit you to like $500 a day. And then if you want to wire deposit in, it takes like a week before it goes in. So there's opportunities that you might miss out on if you're waiting, okay? So that's why I always recommend you have some fiat on hand just in case you need to cost average with, or you need to get in on something that's extremely low, okay? Again, that amount is up to you, whether or not you guys can have that, or how much you want to put in. That's all up to you. But when you're taking profits out from coins, okay, that's where you can keep some on BTC and some in fiat. Okay, so it doesn't necessarily mean that you have to actually deposit from your account. It could mean that when you're profit taking, you can also convert that sum to fiat. I know that's a pain because you have to transfer, either BTC or ETH between a couple places, and there's fees that you have to worry about and so forth. But still, it's definitely worth it when you need to use it. Okay. Now, also try to have BTC or ETH, depending on which one that you use to trade with, on those BTC exchanges such as Binance, Bittrex, and KuCoin. Specifically for the same reason, except that when you want to buy something on those exchanges, you can buy it very quickly. Because sometimes if we have seen like Bitcoin, slow transactions and transaction fees, you don't always want to be moving it and waiting for that, because some exchanges have problems, and you might have to wait hours or days or whatever. So my recommendation, how I play it, is I have a certain amount of BTC or ETH in every exchange I use. Okay, because it doesn't matter if it sits there and you don't use it, because ultimately it's still in BTC or ETH, which are good holds, good staples that will go up. So it doesn't really matter if you keep it there, right? And then you can utilize that to buy when you need to. Okay. Now, obviously, some of you guys are thinking, well, it does matter, George, because I don't want to have all these coins out there, because what if the exchange goes belly up and stuff? That's a good point, right? So you have to make a determination how much you want to put on there. Or you don't have to follow it. You can transfer when you need to, but just know that even Ethereum at times have been slow, okay, where or the exchanges are having problems. So it's really dependent on you, your comfort level in terms of how much you put on these exchanges. But the rest of it, obviously, you want to keep either on your ledger, on your idle wallet, or Exodus, or any other wallet that you want to use. So you have to make that determination how much fiat you want to keep on the exchanges, how much BTC or ETH you want to keep on exchanges, and how much you want to hold on hand. Okay? Moving on, holding versus swing trade versus day trade. Okay, so I just put some dates around here and risk level. So this is, again, up to you guys. For most part, everything I talk about in Insider are holds, okay? Which is coins that I feel like have huge potential, okay, in the next 6 to 12 months, and even more than that, okay? And it is by far the lowest risk, because if you're holding onto a good coin, even in a large correction and it goes down 80%, let's say, eventually it comes back up because there's the potential there. And it's a gold hold. If you're just randomly picking out some coin that has no value at all, it might never recover, okay? So holding by far is the lowest risk, and obviously listening to my recommendations and you guys doing your own homework, you will know if a coin is a good hold or not, okay? And that's usually where you hold for 6 to 12 months, okay? But obviously there'll be times where things are good and bad, and there might be times of no movement that's under 6 months. That's to be expected. But for most part, holding is something that you would want to buy and just kind of ignore for 6 to 12 months, okay? Swing trade. So this is a higher risk, okay? This is where it could be anywhere from a day all the way up to 3 months. It could even be longer than 3 months. But for the most part, you're trading based on something swing. For example, there are coins that simply don't move for months, okay? And then finally it does in a big way, and then you're like, okay, that's enough, I want to get out of it. So that's a swing trade. You want to get out of it while it's going up, right? But the problem with swing trade is a lot of people, when they start doing swing trade, they eventually become day traders, and that's where the danger comes in. Because swing trade is relatively safe, it's high risk, but you know, swing trade is great for people that analyze charts, because I think that does help with swing trade. And you could definitely see swing trades also help when news comes out, right? A certain piece of news comes out for a certain company, it'll definitely move it up. The environment also has a big part to play with swing trade. But for the most part, swing trade is higher risk than holding, because you can guess wrong, right? You could definitely move into a trade where it moves slower than the underlying coin that you might have sold of, or the staple that you had to sell, such as Bitcoin or Ethereum. And then there's the risk where you get in on something and it simply goes down, right? So you actually didn't make any money, you're taking a loss. So swing trade is definitely a higher risk, okay? But I would say more experienced traders can definitely do swing trades a lot better than beginners. Now, day trading, you know, the fear that once you do swing trade, you start doing day trades. That's where anywhere from a day to 7 days, extreme risk. You really not got to know what you're doing. This is where people are trying to pick out highs and lows based on a daily basis, and they're trading between that. And some people is able to do this. Most people I know that day trade, even the successful ones, okay, and this is coming from the stock world too. Day traders, if you measure their performance over a long period of time, and you can say years or decades or something like that, day traders don't make nearly as much as people that hold, okay? And you can look at Warren Buffett, okay? Warren Buffett is probably one of the most well-known investors out there, and he probably is the guy, okay, that advocates holding. Every company that he invests in is long-term. He doesn't invest in companies and trades off unless there's something seriously wrong with the company. But everything he goes into, we're talking about years to decades, okay? Berkshire Hathaway has made billions upon billions upon billions with that model, you can't argue against that, okay? And you look at the day traders, sure, a lot of them make a lot of money. So a lot of them could be millionaires, but they're not billionaires, right? And you could look at a lot of people that's really inexperienced with day trading, they end up just losing it all. I mean, all the stories, all the horror stories on Reddit and all that stuff about people losing their 100 Bitcoins or 300 Bitcoins in 3 months or a month, that's all from day trading. Because once they start day trading, they get addicted, they guess wrong, now they're panicking, and when you panic, you make worse trades, and they start taking more and more risk or leveraging or whatever, and it just gets ugly fast. Day trading is for extreme... I mean, there's extreme risk. Sometimes it works, a lot of times it doesn't, so I don't advocate day trading at all, okay? So I really advocate holding. Now, some of you guys that become more advanced could definitely try swing trading, but do not get into day trade. I'm telling you, even the most experienced day traders consistently take losses too, okay? All right, stop losses and knowing when to cut your losses. All right, stop loss is what is it? It's very simple. On Binance or any of the exchanges, you can set a stop loss. Basically, when a coin drops to a certain amount, it automatically sells it. Okay, a lot of people do follow this. Traditionally, I don't like using stop losses because everything I recommend in Insider and everything I buy myself pretty much are long-term holds. Okay, I don't day trade. So I don't have the fear where if something drops below a certain amount, I need to sell it, because I know that whatever I'm investing in is a good long hold. Okay, that's the reason why I traditionally don't use stop losses and I don't talk about it. But I know a lot of you guys are more disciplined and want to be more ready, so you want to do that, which is great. So you have to determine when that stop loss is. If something goes below, say 50%, does it automatically sell? Or maybe something after 25%, it automatically sells. Again, it's up to you guys. That's what a stop loss is, right? But obviously, if you have all these stop losses in place, depending on what you sell, in a large correction time, everything would have kicked off, right? So that's where it kind of gets hairy at times too. But obviously, if you're getting into a new pick, let's say an insider pick, because there are times where an insider pick gets pumped up a lot and it comes back down a lot. You know, in those cases, if you want to set a stop loss because maybe you got in too late and you're like, screw it, I want to get out, you can set a stop loss. And with any other pick too, if you're, you know that you're prone to FOMO or something like that and you want to set a stop loss for yourself, you're like, hey, maybe I did a wrong move. If it drops below this much, I'm out of it, I'm done. You could definitely use stop losses, okay? So stop loss is a little bit different from when you cut your losses, because stop loss is just like a emergency. Basically, you want to set for yourself, you don't have to worry about it, it automatically gets you out. But then there are times where you just, you know, a lot of people, especially during correction times, you want to know when to cut your losses, okay? When do you just sell? And this is a hard thing to do, because a lot of times if you do this, a coin will go back up, or a lot of times you don't do it, a coin will go back down. So it seems like you're screwed if you do, you're screwed if you don't, right? You're always between a rock and a hard place with this. So this is where you have to really determine for yourself, and this could be because of bad news, okay? Like your gut's telling you, because there's new bad news that's coming out, new bad info. So for example, you hear about something really bad, I'm just gonna say with some coin, right? News came out, like there's some kind of theft or hack or whatever, and you know that, oh man, that's bad, that's really bad, right? Maybe that changes your perspective on the hold coin. You're like, okay, I'm getting out, I don't want it to go lower. So that's an example. Same thing with info, right? Like maybe the wrong circulating supply, it's off by billions or whatever. You're like, yeah, you know what? I don't feel comfortable with that. That's when you want to take your losses, okay? Or cut your losses. Now, and then also, if you get in on something because FOMO or something, right, and you just made a mistake, it is a loser, yeah, you want to cut your losses, okay? Now, the hardest thing I put in here is actually better options. And I mentioned this previously. Sometimes you want to cut your losses because you want to get into a better coin, all right? This is very, very hard to do and very hard to know if you're doing the right thing. For example, if you have a coin that has fell 50% and another coin fell 50%, at the time, both of them are losers in equal amounts. But if you determine that the other coin will rise faster than what you're holding, then the better option is to cut your losses again and buy the other coin. But again, there's no guarantee, and a lot of times you might be wrong. Okay, so in those cases, if you feel that's the right thing to do, then definitely you want to do that. But I can't tell you that's a better thing. You have to determine that yourself. And knowing to do that and knowing if that's the right move, it will be really hard because you're going to second guess yourself in a lot of cases. So that could be an option that you simply do not do. If you get into on a coin and you feel like it's a good coin worth holding, then definitely don't try to second guess yourself. Just hold it. Okay? Just hold it. Don't try to sell it to get into another one because it's going to come back higher, come back faster, because that's where you start getting into swing trading, and then that's where it could lead to day trading because you might do that consistently every few days, and then you're really second guessing yourself all the time. So that is something that you only want to do if your gut is truly telling you that you have to do it, it's the right move, and you know what you're doing, then definitely that is an option. But for most people, I would say don't even consider that. All right. Knowing when to sell to buy another coin. This kind of rehashes what I just said. But, you know, sometimes it's caused by the environment, right? Sometimes it's caused by environment. Sometimes it's caused by news. Sometimes it's just your gut feel, okay? Again, I don't recommend this for beginners or intermediate or even advanced traders, right? This is something really, I mean, the only reason why you really want to do this is if there's something really bad with the environment or news. For example, if the whole market is crashing really badly, okay, due to some environmental news, let's say China banning Bitcoin or you know, South Korea banning Bitcoin or whatever's coming into this banning Bitcoin, you know that environment's causing everything to go to hell, basically, right? Then maybe it's time to determine, hey, you should sell this and buy Bitcoin or Ethereum instead because it's a better staple and it will recover faster. That is kind of an example of when to do that, but again, that usually doesn't happen. Caused by news. Again, maybe you're holding onto a good coin and some news comes out and says the founder leaves or they get hacked or something happens. There's a major delay on a project, right? So you know something has changed. Now you don't believe in that coin as much anymore. So then maybe then you would want to sell and get into another coin. And then the last thing is a gut feel, right? Like something is telling you that this other coin is better due to something, right? Then you can do that. But again, this is only for more people. I normally don't recommend this at all. But I know a lot of people consistently do this and second guess themselves. So for the most part, I don't recommend this, but there are times where you want to do it. Okay. I think that's it. Yeah, that's pretty much it. So the next steps is this is a long video. This is everything in terms of trading strategies that I follow and I suggest all of you guys follow and review. I think a lot of this could be fun, you know, basics level stuff, but a lot of this are things that you guys didn't quite know. So definitely review this if you're confused by anything I've said. Next steps, if you guys haven't watched my portfolio videos, shame on you, you should have, but definitely watch out. Watch the videos for how to build a portfolio for beginners and how to build it for faster growth. And then I will be releasing another video which is based on how you research coins. So definitely take a look at that once it gets released. Alright guys, that's it for trading strategies. Take care. Bye-bye.